Good morning, class. In this lesson, we will talk about standard costs and variances. For this lesson, these are our learning objectives. Kindly go over them. Now, let's begin with our first learning objective. That is to explain how direct materials and direct labor standards are set. Standards are benchmarks or norms for measuring performance. In managerial accounting, dalawa yung types of standards that we commonly use. One is quantity standards, the other one is price standards. Ano itong quantity standards? Yung quantity standards ninyo specify how much of an input should be used to make a product or provide a service. Say for example, you are a furniture manufacturer. Tapos, one of your products is a bar chair. So, ano ba yung standard mo to come up with that bar chair? What do you mean, ma'am? Ano yung standard ko to come up with that bar chair? Say, for example, yung bar chair mo is circular yung upuan. So, ilang meters? Okay, say for example, yung upuan ha is made of wood. So, gaano karaming wood ang dapat mong makonsume to finish one bar chair? So, that's what we mean by quantity standards. Price standards naman specify how much should be paid for each unit of the output. Let's go back to that piece of wood. So, that piece of wood, you need that to come up with your finished product. Your finished product in this case is, yun nga, yung bar chair. So, if I will purchase that piece of wood from my supplier, how much should I be paying that piece of wood? So what's my standard for the amount to be paid for that piece of wood? So we refer yung price na yon in this case as our price standard. So quantity is ano yon? Yung measurement ng wood. What's your standard? To come up with one finished bar chair. So gaano kalaki yung wood na gagamitin natin. Price standards naman refer to how much price or how much amount should be paid to your supplier for that piece of wood. So how do we set direct material standards? Let's begin with your standard quantity per unit. Your standard quantity per unit for DM should reflect the amount of material required for each unit of finished product. Kasama dyan yung allowance for unavoidable waste, spoilage, and other normal inefficiencies. For your price standards naman, your standard price for DM should reflect the final delivered cost of the materials net of any discounts taken. Say for example, your supplier will give discount, then the price standard that you set should be net of any discounts. Now, your quantity standards is being summarized in your bill of materials. So, ano itong bill of materials? A bill of materials is a list that shows the quantity of each type of material in a unit of finished product. Now, before we set the standards for your direct labor, I just would like to emphasize this one. If the company is applying yung zero defects na mentality. So, if advocate yung company ninyo ng zero defects or your company is using the Six Sigma, then the Six Sigma argues against accepting waste and spoilage. So, if in your standard, if allowances for waste and spoilage are built into the standard quantity, dapat yung level ng allowances that you have incorporated to your standards should be reduced over time. In setting your direct labor standards, The standard rate per hour for direct labor includes not only wages earned but also fringe benefits and other labor costs. Many companies prepare a single rate for all employees within a department that reflects the mix of wages rates earned. As for your standard hours or time standards, the standard hours per unit reflects the labor hours required to complete one unit of product. Standards can be determined by using available references that estimate the needed time to perform a given task or by relying on time and motion studies. The price standard for variable manufacturing overhead comes from the variable portion of your predetermined overhead rate. Your quantity standard naman for VMOH overhead is expressed in either direct labor hours or machine hours, depending on which is used as the allocation base in the determination of your POH rate. So here is a general model for variance analysis. Difference between standard prices and actual prices, along with the difference between your standard quantities and actual quantities, we call them variances. So the act of computing and interpreting variances is called variance analysis. Variances for price and quantity are determined separately for two reasons. The first reason is that different managers are usually responsible for buying and using the inputs. For example, the purchasing manager is responsible for raw material purchase price, pero si production manager yung responsible for the quantity of raw materials used. Second reason is that the buying and using activities occur at different points in time. For example, raw material purchases may be held in inventory for a period of time before being used in production. Price and quantity variances can be computed for all three variable cost elements: direct materials, direct labor, and variable manufacturing overhead, even though the variances have different names as shown. So for price variance ng materials, we call that materials price variance. For labor naman, the price variance, we call that labor rate variance. And variable overhead rate variance for variable overhead. Quantity naman, we refer to the quantity variance ng materials as materials quantity variance. Labor efficiency, if labor and then variable overhead efficiency, yung quantity variance for your variable overhead. Now, although price and your quantity variances are known by different names, they are computed exactly the same way as what you can see in the slide. So, the same yung computation for direct materials, direct labor, and variable manufacturing overhead variances, whether they are price variance or quantity variance. So, if we want to compute for your price variance, all we have to do is just get the difference between the products of your actual quantity times actual price minus actual quantity times standard price. So the difference nilang dalawa is what we call price variance. The product naman of your actual quantity multiplied by your standard price, and then standard quantity and standard price, yung difference naman nila is what we call your quantity variance. So, let us understand your model. Pag-usapan muna natin first your actual quantity. The actual quantity is the actual amount of direct labor, materials, and variable manufacturing overhead. So the actual amount of those elements that you actually used. In contrast naman to your actual quantity, standard quantity is the standard quantity allowed for the actual output of the period. Actual price is the amount actually paid for the input used. While your standard price is the amount that should have been paid for the input used. In equation form, here is the computation for your price variance and quantity variances. Yun nga, in equation form. In this slide naman is another way to look at the variances. We call this your line-by-line method. So if you notice, halos parehas lang naman. Then what method will you use? Well, that depends on you kung saan kayo mas comfortable.